Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner Don Durrett, founder of GoldStockData.com, as well as Andy Dornan, who is CEO of Sun Silver. Welcome, gentlemen.
Thank you very much, John.
Yeah, welcome, Andy. I'm looking forward to this update.
Yeah, me too.
Yeah, Don.
Thanks for having me on, guys.
Of course, no problem, Andy. Looking forward to hearing the story. Don speaks very highly of you and the story, and we'd love to learn more. So, why don't you give us a 7 to 10 minute overview of Sun Silver, and we'll ask some questions.
Yeah, sure. So, as John mentioned, Andrew Dornan, Managing Director of Sun Silver, also one of the founders. So, 4 years ago, we took a long-term view on silver and its kind of emerging critical mineral uses. And I think that's got some tailwinds behind it now, given that silver's been added to the draft US critical mineral list. And then we went basically in search of largest best of class assets in tier one jurisdiction. That's where we come across the Maverick Springs asset, which is based in Nevada, which is the flagship asset within Sun Silver. That asset has a JORC inferred mineral resource of 480 million ounces at just over 68 grams per tonne silver equivalent. The resource is open in all directions. It's probably important to note that to the northwest and to the south, some of the largest intercepts in the project are actually on the boundary of the resource. So significant growth to keep growing this mineral resource to the north and south. However, at near on 500 million ounces in the ground, it's also critical for us to get this resource up into the higher confidence categories, up into indicated and measured, and wrap some economics around it in due course as well. We've been listed on the ASX for it's roughly 18 months. So May last year, we listed at a 20-cent share price and a valuation of approximately 25 million Australian dollars. We're trading currently at about 170 million dollars and about 94 cents currently. So really good growth in the stock since we listed. Been drilling most of the time since we listed, a significant RC program last year, and we've been rolling out a diamond program this year, focused on some extensional step-out holes, as well as drilling out to get the resource up into the indicated category. In July this year, we completed quite a transformational placement. We raised $30 million, and that really institutionalized our register. So we've got really supportive institutions in the US and throughout the world now. Drilling currently, we've had 3 rigs on site, 1 RC and 2 core rigs. As mentioned, they've been focused on the infill of the resource. They'll keep drilling till the end of November, and then there'll be a short hiatus for winter when we'll resume sometime in Q1 to continue that program. What the overall target for the business at the moment is so I suppose under the ASX JORC requirements, to complete a scoping study, which is the PEA equivalent, you need to have 70% of that PEA scoping study resource in indicated. So we are unable to execute a scoping study until we have 70% of that in indicated. Bit different to North America, where you can complete that on a inferred resource. So we're working through that as quick as we can, while in parallel also executing a significant MET test program. That MET test program is looking at all different types of processing methods and the costs that would be associated with that. So we're currently undertaking intermittent bottle roll tests, which will then feed into some longer column leach tests to really, sorry, I'm getting a bit of feedback from someone building next door, to look at simulating real life heap leach scenario on these particular samples that we've got in for testing. As it sits, we're not tied to any particular processing route. I think we're seeing some quite favourable tailwinds in the pricing perspective from silver, which Don and yourself are quite across, John. And what we really want to understand is how we can extract maximum metal out of the ground for minimum cost. And we'll be working through that over the next kind of 18 months and hopefully be in a position to publish a study kind of this time, end of next year, maybe early the year after. Couple of key items throughout this year that we'll also look to bring into the project is historically the assays on the project were an aqua regia or a 2-acid digest assay method, and that's not traditionally used in silver as we speak. It's more a 4-acid digest, and as we have rolled that out across historical drill holes, we're seeing a 20 to 30% increase in the silver grades. So over the past 3 to 6 months, we've been reassaying as much of the historical core and pulps that we have, and we'll be looking to bring this into our resource modelling when we do an update in the next 4 to 6 weeks, as this could have a significant impact on both the size and grade of the existing resource. So as we speak, as we sit right now, we are just waiting on third-party lab assay results just to verify that the reassay program we've executed does check out. So that will be a big point for the company, and we'll also look to bring in the extensional holes which we drilled to the north into that resource update as well. We're also looking at delineating a from surface mineral resource. Historically on our project, we were looking at just the mineral resource underneath, sitting about 100 meters deep. But what is being left out is there's a structure that trends to surface in the south central portion of our project, and it had never been pulled into the mineral resource because it is a little bit lower grade than that of the main resource. But as we've been developing and analysing the data, this resource is potentially going to enable us to offset any pre-production capital and pre-strip. So over the next 12 months, we're looking to delineate this from surface mineral resource separate to the main resource underneath, and that's going to be critical for us to offset what was originally perceived as a large pre-production capital cost in pre-strip to ensure that we can offset that in any future studies. But in terms of we've also got parallel activities that we're looking at the moment and developing a strategy on the engagement with the current US administration. I mentioned a bit earlier that silver's been added to the US critical minerals list. We are the largest pre-production primary silver asset in the US, and as part of that, we want to develop a strategy that we can potentially look for some support from the US current administration as we go through the next stages of our development life cycle. What that may look like is not defined yet. We're quite open to any pathway. It could be anything from expedited permitting, some kind of grant funding, or even some form of low interest loan that helps support the rollout of the capital of the project. Timing wise, the project is on quite a rapid development life cycle. Like anything, you want to maximise while commodity prices are moving up. We completed all our environmental baseline surveys this year. So having a development background myself, which I'll go into in a minute, always seen it as critical to ensure that you undertake these baseline surveys early so they don't pinch you at the end once you get your studies completed. So that those baseline surveys, ARC surveys, are all completed, and they will just need to feed into the relevant approvals once we land on what the processing facility will look like for Maverick Springs. This may be a heap leach, a tank leach, or maybe even a mix of both. We're not too sure at this point, but we're keeping all options open. Bit of background on the team. So myself, I've worked in the mining exploration space for over 20 years now, mainly in senior commercial roles. So I held the commercial manager role at Fortescue Metals Group when they expanded from 45 million tonnes iron ore output to 155 million tonnes iron ore output. That's roughly $7 billion project. I was responsible for all the commercial aspects of that, from front-end project delivery strategy right through to closeout and steady state operations. Also spent a significant amount of time at Newmont, at their Boddington gold mine, and also the Tanami gold mine, which is their highest grade gold mine in Australia, where I led the project execution strategy rollout into operations for that as well. So significant experience for myself and right throughout the board in developing major projects. Why is that an advantage? Because we know the risks that come with it. Once you hit those key development milestones and large expenditure points, it's when the large dilution risks come into the project and where the largest risks, especially in ramp up into steady state production. So we understand those risks, and we know how to mitigate them on the front end to ensure that we maintain and maximise our shareholder value. I think that was a very quick overview. I suppose if there's any direct questions on any of that or anything you believe I may have missed, I'm happy to run through that as well.
Yeah. Good job. And I'll start it off. So obviously coming from a background with Fortescue, Newmont, et cetera, this is stepping down, I guess, in terms of responsibility. And I don't want to say it that way, but obviously you're working for much larger companies, so that's positive. We look for that kind of thing where people come into a project, a junior project with, major experience. How did you end up finding this asset, and what did you pay for it?
Yeah, so I was also a big private investor while I worked in those organisations, and it probably the co-founder, Matthew Hayes, who's also the corporate development manager for the company. We had an investment that went pretty wrong or went sour, and really didn't like how the management team basically utilised the company funds, and it just become a really poor investment from our side. And given my background in project development and identifying undervalued companies that were already listed, we kind of thought, well, why can't we do this better ourselves, apply what we've learnt through working in the industry, identify these assets, and basically protect shareholder interest as we would have wanted other directors or founders of other listed companies to do so. And then that's where we went on a deep dive into what minerals we like. We really love silver. We think it's that industrial complex technology base that's ever emerging, I would say. There's all the kind of baseline supply demand data out there, but I've got a big belief that doesn't factor in any of this new emerging technology that we're seeing. Like AI data centers is one, but any new complex technology that's coming online is going to use silver. So it's going to form this steady base. And then that's when we went looking at assets. So we developed a database over a number of months of the largest silver, all silver assets, I should say, globally. And we landed on Maverick Springs. It was in the US, quite a distressed company at the time. And we ended up acquiring it for, I think it was 5.5 million Canadian. And that was a mix of cash and stock, which we then brought to the market in May last year and have been working on it ever since. There hadn't been any work done on the asset since 2008. It was land banked for near on 15 years with a company called Waterton, which you might be familiar with. And then the company who held it prior to us, Element 79 Corp, they were unable to do a lot of works on the project because they were quite constrained from a cash flow perspective.
So first of all, when I met you guys at Beaver Creek, the one thing I liked was your insider ownership. Is it still very strong? Are you still, because the one thing about development projects like this is I want to see them go to production. So
Yeah.
I know you're a founder and you want to take this to production, but could you tell me a little bit about your insiders? Now, for me, an insider is any long-term shareholder that's not interested in a quick return.
Yeah. So I think from myself, I hold about 8% of the company myself. So Matthew Hayes, who I mentioned before, who was one of the co-founders, he pretty much sits next to me in the office. He also owns the 8%. Sean, who's our chair, he has 4.2 million shares, which sits at about 2%. But I think across the board and management and insiders, it's about 24%. But then through our very close network, would push it up to kind of 35-40% who are all in it, who have all been in it from the start and are looking to go the journey on the project and the company.
Is it your intention to build a big company, or do you guys want to take this to production and sell it? I mean, are you in this for the long term?
So I touched on it a bit earlier. So going through the development life cycle, there becomes a point where large dilutive events occur and big risk, big points where the risk profile of the company becomes quite a lot higher. Our intent is to go down the full development cycle, but we're also not naive to those risks. And if at any point in time that there's an interest to take over the company by someone who potentially has a larger balance sheet to fund a project like Maverick Springs, then it's something we would look at. But from our perspective, we have the development capabilities and we're pushing down that pathway as quick as we can.
Right, but this should be around a 12-15 million ounce a year project. So if you had a $20 AISC and silver prices go higher, free cash flow is immense. And so you kind of want to,
maximize that.
You want to maximize that. But my question was, is this a company builder for you? Do you want to, buy another? After you get done with this one, do you want to, do it again?
Yeah, definitely. So we're always looking at leveling up the company. We've got a big belief that in some instances, 1 + 1 = 5. So if there's an opportunity to acquire an asset at any point in time that's going to underpin the company or add significant value, then we'll definitely look at that. But we're also cognizant that Maverick Springs is unique. It is massive. So the resource runs, I'll do it in miles, so about 1.5 miles long by 1 mile wide. Drilling that out and increasing and getting some economics around that is capital intense. So we're also aware of that. We don't want to divert focus currently until we get to a point where the capital curve of this project flattens out.
You don't, right. You can do it in phases, though. You don't have to. 100%. It's a huge pit, right? You can do it in two or three phases. So it's 68 grams per ton silver equivalent. What is in that 68 grams?
So
Is there some gold in there?
Yeah, so there's 0.31 grams per ton gold, which works out to 2.16 million ounces of gold, and 42, let's say approximately 42, 43 grams per ton silver, and that's about 200 million ounces of pure silver, or the 296 million ounces of pure silver. But it's silver gold, so it's not polymetallic. So having gold as our byproduct, if you like, at the current
Nice.
gives us massive tailwinds.
Yeah, that's outstanding.
It's about 6 million ounces gold equivalent if you flipped it.
Right. It's big.
About 1 gram. Yeah.
So you mentioned the PEA, you need 70% indicated, and you mentioned that you thought you'd be able to complete that in 1 year. Is that right?
Yeah. So we're hoping that, well, what we are commencing is we've commenced is internal studies. So we want to ensure that we run these internal studies. So when we get to the point that we reach that 70% or have a decent amount of the resource in indicated, which will form 70% of the study,
Right.
we can just do a relatively quick update rather than starting a scoping study at the point we get to that 70%.
Right. And you could focus on the higher grade section, right? Instead of doing the whole thing.
Yeah, there's a high grade section, but also this from surface is key.
Right. Do you how much you just said you raised 30 million, so 30 million Australian. So how much do you currently have?
I think 34 is our quarterly from released on Friday.
That's a lot of cash. Is that enough cash to finish the infill?
Yeah. Plenty of cash to get us through and get a study out.
Outstanding. Metallurgy. So of the ore, how much is oxides? How much is sulfides? And do you have any refractory ore?
So no refractory, no carbon issues, no preg robbing. The historical reports had that the whole resource was oxidized. We're developing a bit of a different theory on that based on the drilling we're doing at the moment, which would have it that it's probably more like 70, 20, 10, 70 being oxide, 20 being transitional, and 10 being sulfide. But that's still a developing theory as we drill more core holes in the deposit.
And the oxides are closer to the surface, right? So your PEA, I mean, you're basically going to be mining oxides for the first 10 years of the project, right?
Yeah, and especially that near surface is key for us. I keep going back to that because that was one of the I suppose the questions on the project was your resource, your mineralization starts at 30 meters, but your main resource is at 100. How are you going to wear the pre-production capital and pre-strip? So this near surface is oxidized material, and it will be of higher grade, we believe, than what Rochester operates at their 12 grams a ton. So that will offset the pre-production capital required in pre-strip. And then, it's a matter of we need to still understand how this project recovers in multiple processing scenarios. Because like you mentioned, Don, with the pricing of silver where it's at and some of the forecasts, we want to ensure that we get maximum metal out of the ground and don't leave anything on the table, provided it stacks up.
Well, here, let me give you some motivation. So for every 1 million ounces of production, you get $500 million in value for your company. And the reason you get it is because at $100 silver, I should preface that.
Yeah.
So if you're at $100 silver and your break-even cost is $50, which you should be able to hit that number, right? 50?
Yeah. I'd be very worried if we couldn't.
Right, you should be able to hit it, right? So for every million $100 silver, you get $50 per ounce. So $50 times a million is 50 million. So you get 50 million in free cash flow per million ounces. And then you put a 10 multiple on that, you get 500 million.
Yeah.
Now, the odds are your costs are going to be better than that. So 500 million is like, that's your floor.
Yeah.
So the lower your costs go, the more your free cash flow goes up. Then the key is your multiple. Now you're in a good location and you have a high margin. So the odds are your multiple will be higher than a 10. Yeah. So in actuality, you're going to get somewhere well above that floor. So you're probably going to get around, let's say $700 million per 1 million ounces of production.
Yeah.
Okay, so you don't need to mine 15 million ounces. That's $7 billion. You don't need that. That's you can get that later, but the low hanging fruit is like 5 million ounces. $2.5 billion is kind of low hanging fruit. And then once you get into production at 5 million ounces, just doing the surface oxides, then you drill more, you have all this free cash flow, you have a ton of free cash flow. Yeah. So save all that drilling cost for later and do it later. And so here I even get you even more motivated. $100 silver is actually low. That's the number I've been using for 10 years. That number is too low. It's going to be above 125.
Yeah, right.
So
when do you think that will happen?
125 in 2 years. It's not like we have to. It's not like by the time you go to production, we'll be at 125. 2 to 3 years. It all depends on gold. Depends what gold does. So the gold silver ratio is going to basically. I've been using percents because it's a really easy math. Say 80 GSR, 60 GSR. So if we we're currently at a little over a 1%. So if you take $4,000 gold and you do 1%, it's $40 silver. Well, 1% is just ridiculously low. So we're going to go to 2%. So you can just use the number 2. That's minimum, right? So it depends on how fast gold. But if gold goes to 5,000, you do 2%, it's $100 silver. You're already there. And I think we could go. We could actually get $5,000 silver next year. Possible. I don't think so. I think we're going to go 4,500 next year.
5,000 silver. Will be
so I think we're at 5,000 gold in 27.
I'm really hoping for 5,000 silver.
So 5,000 gold in 2 years at 27, and you throw 2% on there, you get $100 silver. So we're looking at $100 silver in 2 years, and that's floor. That's like the minimum. So you don't need to mine 10 million ounces, 15 million ounces to make a boatload of money. So you definitely build this in phases. There's absolutely no reason to do the Cordero way where they're going to mine 32 million. Actually, I think more. I think 37 million the first year because of the high grade. They're building the whole thing, and so is Vizsla. Vizsla is basically they're going to mine like 18 million out the gate. Yeah. But you don't have to. That's an option, right? It's like, especially heap leach.
Yeah.
Heap leach. Now, when you go through a mill, sometimes it makes more sense to build a big mill. You get, it's more economic. But heap leach, no, you don't need to build a mill at all. You're heap leaching it. So just throw out a scoping plan, drill the surface, and 5 million, 8 million ounces to start. Get it built and then double it, right? And it's worth a fortune. I mean, that project is absolutely worth a fortune at $100 silver.
Yeah.
So the faster you get into production, the better. And you don't want to drill 1 mile by 1.5 miles. You don't want to drill that whole thing out.
It's actually so the way it's been drilled, it's not as much as you think because it's not a start to finish with the way it was previously drilled. Some of the areas, there's a limited amount of drilling, but that main south central section, once that's validated, it really opens up the rest of the resource to be increased into indicated. But we are looking at the phases but just ensuring that the mine planning allows us to continue cutting back and doesn't hamstring us into satellite pits, if you like, because we want to ensure that as we're expanding and basically not isolating any ore.
Right. Very exciting project. The key here is, how rapidly you advance it, where people can see like the end result.
Yeah.
It's like, okay, now we see what they're going to do, what the plan is, what the path is, how long it's going to take. So right now we have an idea, we have a kind of a vague understanding of your potential here. One final question I have is the NSR. I know that the NSR is kind of a problem. And so can you discuss the NSR and how you're going to resolve it?
Yeah, I think I disagree that it's a problem. I think if you look at royalties, taxes, both from a government and the state government, federal government perspective, we're actually in a really good position because Nevada has some of the lowest taxes in the US, but not only in the US. Compare it to the likes of Mexico, Argentina, and where a lot of other silver projects are. Put the NSR in with the taxes, and we're probably still coming out 10% less than most other projects in Mexico and Argentina. So, although on the surface it looks like an issue, we don't exactly see it as an issue. It would be an issue if we were in Argentina, where it's already up kind of at that 45% government taxes and royalties. But I think with the NSR, we're sitting at about 33% all in versus 40, near on 40 in Mexico and nearly up near 50% in the likes of places like Argentina. Australia, again, probably more up around, once you add the state royalties, company taxes, up around 40%. So we look at holistically in with all the other taxes and royalties that we'll be paying, and ideally would like to get it down, but it's not going to severely impact the project because we look at it from a macro perspective.
So my understanding is the NSR is 7.4%. Is that correct?
Correct.
Okay, so 7.4%, how much free cash flow would you lose just on the NSR alone?
Oh, we haven't done
the math. You haven't done the math on that yet?
No, we haven't done the project economics yet because we're still in the.
But you can do that. Right, but I would have done it. You can do that on any company. It doesn't matter your economics. It's
of course
7.4. You basically, because it's a gross royalty, it's 7% of gross. So you could.
No,
I could ask Block. I could go.
Net smelter.
Yeah, it's gross revenue.
Net
and
smelter.
NSR, net smelter royalty is basically gross revenue. So if I could go to Grok right now and say, if I had a 7.4 NSR, how much free cash flow would I lose annually? It's a big chunk of money.
Yeah, of course.
You say it's not a problem. You're going to have 33% tax. Sure,
but if you look at
it, wouldn't you attempt to buy it back?
Yeah, of course. But if that's what we work through as a company to buy it back, but you're dealing with individuals who have held onto it for a long time. We're working through it. We believe we will be able to buy it back at a point in time. Is it worth doing that while we're still in an inferred stage? We're not at that point, we don't believe.
Oh, I agree. I agree with you there.
Yeah.
I agree that it's kind of early in the game.
Yeah.
Wait until your market cap's $500 million, and then you got a bunch of cash in your pocket, and then you can buy it back. I agree. My point is that I see it as an issue that at a certain point I expect you to resolve it down. You don't have to buy the whole thing back. I mean,
no.
Buy half of it back.
And we have a strategy to do that, but the reason why I was highlighting it is it's not. If you went and put us against if you put our asset as it is in Mexico, Argentina with no royalty, we're still paying more out in those countries.
Right. I agree. I agree.
Yeah.
That's not the issue. The issue is that the overall value
More
of the
money in
company,
our pocket.
right? The overall value of a company will still get dinged. That's my point. We don't want shareholders to have a reason not to buy your company. Trust me, it's unbelievable how picky people are. People will not buy a stock for one issue. It happens all the time.
But that's why we try and educate investors as well, is
right.
the NSRs are the ones that are dangled in front of everyone, right?
Yeah.
But it'd be naive to just go, oh, that's got an NSR and walk away from a project. When if that project was in any other location without the NSR, there's still more of its cash flow going out the door in government royalties and taxes. It shouldn't be treated any differently.
Right. I only bring it up because I expect you to buy part of it back. I expect it to go down. I don't expect you to go into production with a 7.4 NSR.
No. And we don't plan as a company. We don't plan or want to have that sitting there, right? But it's also we need to deploy our capital sensibly currently, and until we get to that point where it makes the right sense, and also we need agreement too. It doesn't necessarily mean that there needs to be a negotiation to get to that point. So we're well aware of it. We were aware of it when we bought the asset, but we're also aware of macro royalties and taxes, and we consider everything when it comes to looking at the economics. But I'd love to have 0% royalty on it, like we all would. But that was just one of the pieces of it when we acquired it, and we're well aware of it. We did our research, and we're comfortable with it, but we want to buy it down.
Right. One final question. Permitting. You said that the baseline's completed. How long do you think? Say after you get the PEA, you kind of start. And at that point, you kind of have an underlying understanding of the economics of the project. At that point, do you start permitting aggressively? And if you do, how long do you think it will take?
Yeah, so we want to start before. So we want to continue to kick off as many of the requirements as we can. We're in constant discussions with the BLM and NDEP about the project. I think realistically, it's going to be a 3-year process at minimum if we don't get any support to fast track it. But part of our next 12 months strategy with engaging with the US administration is we want to get assistance in permitting. We see that this asset holds strategic value to the US. I think the US, and you probably know the numbers exact better than myself, Don, but I'm pretty sure the US produces about 30 million ounces of silver a year, and they consume 250 to 300 million ounces. If we can bring on 5 to 10 million ounces, at 10 million, that's 30% of what the country consumes. I think there's a good case to get support for our project and help us permit quicker. And that's something we'll be engaging on in the next probably 6 months rather than 12 months, and really crunching that timeline. We don't want to execute our project in a non-socially compliant way, but I think there is some particular timings that could be looked at to help speed up the process.
Yeah, you have time. I mean, the next election isn't until 28, so you have 3 years to get it all done. So I think you probably will. So I'm a shareholder. I got in early, and I'm glad. I like big silver projects, and the grade never bothered me because I believe in higher silver prices.
Yeah.
And most people, they didn't buy you earlier. Like, I'm not going to buy 68 gram per ton silver mine.
Yeah.
But now it's starting to look really good.
If you look at Rochester's 12 to 20 grams and are printing money, right? And they're to the east of us. So if you think we're low grade, go look at Rochester. They're printing cash at 12 to that operate between 12 and 20 grams a ton. Like,
Well, when Derek and Newmont start knocking on your door, just tell them, call us later. We're busy. Just say we're
yeah,
busy. All right.
yeah,
Well, actually, if they
Right.
want to do a hostile, if they want to go after you with a hostile takeover, that would be a rough one because they could offer, right now they could offer 150% premium, and it would probably be a close vote.
yeah. Uh, we we see that we're just at the start of our strategy and this kind of macroeconomic move in silver. So yeah, we're going to keep our heads down and ticking off these goals and key strategic points we have. And the share price will take care of itself.
Well, I would recommend taking a look at what Alex has done over at Barton Gold.
Yeah,
He's done a really good job marketing his company. His face is out there. He does a lot of marketing, and the thing I like so much about him, he sends emails out all the time. I get an email from him, company email from him, once a month, once every 2 months. He's constantly letting everybody know what he's doing. So yeah, I would take a look at what Alex is doing as far as marketing goes. And he throws out, call him too. He's a nice guy. Ask him what he's doing. I'm sure you guys get along great.
Yeah, cool.
But I really like that approach. Another guy that does it, Hugh Agro, Revival, excuse me. He's constantly sending out emails about what his company's doing. Because we forward those out, we share those with the public, right?
Yeah, cool.
Get your email list.
I just need to send it to you, Don, and then it will go wide.
Right.
Yeah.
Right. Yeah. Yeah. That's another question for Alex, is ask him how he builds up his email list. And Hugh, I'm sure they have a fairly decent one.
Yeah.
Well, you guys collect them on your website. I mean, that's how you. Yeah.
I've got quite a large database as well.
Right. So I thought I'd throw that out there.
Yeah, cool.
Thanks for being on,
We're going to leave it there. Thanks a lot for coming on, Andy. We really appreciate it. And we'll be following the story. Hope to have you on back next year when things are a little bit further down the road.
Perfect. Thanks, John. Thanks, Don. Enjoy the chat.
Right.
Likewise.
I like big silver projects. I think silver's going to the moon here. 125 plus is my expectation. And after it does that, I don't expect it to come down anytime soon. So, I mean, this project, $30 silver does not work. Maybe it does. He said Rochester's printing money. Maybe it does work at 30, but I know it works at 100. And so I always speculate on these. And so for me, take a small position and then see if they can build it. And if they can build it and the price of silver goes up, I'm going to make money. So I'm in the bigger is better camp. I like big projects.
That's what we are. Biggest of class always seems to. Well, we're the only asset of this size, like, that's not in a major company's hands,
right,
in the world. So that says something, right? And the main reason was because Waterton sat on it for 15 years and everyone forgot about it. Didn't even know it existed.
Right.
Yep.
I didn't turn my video off, by the way, so I don't know what's happened.
That's okay. No problem.
All
right. Well, Don,
I know it's late for you guys, but thanks very much, and let's connect again soon.
All right.
Okay.
We'll do.
Cheers, guys.
Thank you.
Sure. If this project's got a ton of potential, and they build this thing could have, it's 450 million ounces growing in size, and it's all gold and silver. I mean, this thing could easily be over 10 million ounces a year, 15. We'll have to wait and see how they decide to build it. But the free cash flow potential, which is what I'm always looking for, was enormous. But this isn't something that's going to happen overnight. It's going to take, it's going to take a few years. They got to drill for a year to infill this thing. Then we're probably going to have to wait 6 months for a PEA. So maybe we get a PEA in 27. So it's a bit of a wait. Not a lot of news between now and then. But when that PEA comes out, it should be a monster PEA. And so that's going to change the whole tone around that company. Plus, they got that connection with the U.S. government for strategic, strategic silver play in the U.S. That could get some, especially they can get a loan. They might get a low. As a matter of fact, the U.S. has been known for writing checks, right? They basically they actually write a check for these mining companies and say, "Here you go." They just hand them out. So they might hand them a check for $50 million and say, "Advance this silver project."
Yeah, I think we're going to see more check writing because don't forget Trump idled a lot of government workers earlier this year. So a lot of the companies that I know, let's say in critical minerals, were pretty far down a path to a non-dilutive check and then had to hit the reset button because everything got stalled. So now we're starting to see some more of those companies starting back in July start getting checks again. But the first half of this year was pretty disappointing for that. I think it's inevitable that it'll start picking up again in Q4 here and into next year because the U.S. has no choice. Their back is against the wall when it comes to global, who has the minerals globally, right? It's not us. That's why you're seeing so many deals with Australia and Ukraine and all these other countries. We don't have them. So, hey, we got to leave it there, Don. But thank you again for the time. And thanks to all our listeners. We hope you enjoyed this with Sun Silver and Andy Dornan. And follow us on the next one. Thanks, everyone.
All right.